Hi, good afternoon, everyone. Thank you for coming. I'd like to thank FSMOne for bringing me here. Some of you may ask me what does 955 or 996 means, right? Well, 955 is us. We work 9 to 5, 5 days a week. But given the current environment, everything looks quite volatile. Do we need to adopt the Chinese style of working? 996. 9 to 9, 6 days a week. All right? Or with the advancement of technology, we may just be able to stick to 955. Or even 4-day week, hopefully. All right? But nevertheless, I think what is important is things are changing. But unfortunately, the change always reverse, one way or another. And the implication is twofold. Firstly, if you are a consumer, you may say, I maybe don't want to spend so much money because things start to change. The tariff comes in, things become more expensive. If you are a corporate, you have plans for a multi-billion project for your plants, suddenly you'll be asking, oh, I don't know whether I should have a plant or not because I don't know how much tariff, where it will be. Or even worse, you may have built a huge plant in Mexico and supposed to start operating this year and send the stuff to you in US. And suddenly you don't know about the tariff rate. Your plant is as good as obsolete. All right? So in such an environment, the uncertainty generated will be the biggest issue. At the same time, the tariff effect is also feeding into the system, which means your growth, natural growth from capex is slowing down. Then inflation, because of prices, tariffs, your inflation float up a little bit, like what you see in US recently. And they will tell you this adjustment of 2.7%, right? Was only the first step. It's like you drive a manual car, it's only the first gear. There's still second, third, fourth, fifth gear to come. So inflation in US may actually float up a little bit higher. And if that is the case, you can change the chairman of the Federal Reserve, but you cannot change every single governor. Because all the voting is still on who votes. All right? So there is a difference. Now let's start. This is from World Bank. They produce this number twice a year. Yeah, once in January and once in July. They tell you how much they think the world will grow. The reality is all these numbers, especially for 2025 and partly for 2026, will all be revised downward. Malaysia already started the ball rolling. They already tell you previously, we think we can do 4.5 to 5.5. And I think about a month ago or so, they say anything above 4 is very good. And lately, we just cut interest rates to make sure that we remain steady. I think that's a very important indication of the uncertainty. All right? And even the Federal Reserve says US is at best doing 1.4% this year. All right? So there's a significant difference from 2.7 from World Bank. There's a huge amount of money difference. All right? The other one is when your growth is no good, your corporate results cannot be maintained at this level. It has to be revised downward. But if you notice, the market has continued to go up, not bringing into expectation that earnings growth could moderate. How much would it moderate? I can't tell at this point, because we are already now in July 2025. That means we're looking at 2026 numbers already. All right? So how much would the 2026 numbers be revised downward? I'm not sure. But the other one to consider is this. If I'm a fund manager, where I want to put my money, other than having beautiful earnings growth, is how much confidence I have in your system. How much I have confidence in your governance. All right? And you look at how the US dollar have behaved. Effectively, you have a situation whereby people is unwilling to put more money or hold more US dollar, and they are holding less US dollar. All right? Now, the moment you start holding less US dollar, two different situations will happen. One will be within the developed country space. The other one will be within the emerging market space. Why? Because you want to hold less US dollar, that means you may most likely put less money in the US equity capital market. So that may end up you have to Whatever addition you did not put into US, you may have to decide how much to put in Europe, how much to put in Japan. And on top of that, you also ask how much do I want to put in emerging markets. So that this two-layer asset allocation impact that you think of. All right? So that's rather important. We know about the dollar depreciation. I'll talk about that. Let's talk a bit about Europe. Europe is in very bad shape. I think for 2 continuous years, the region hardly have any growth, especially the largest economy. All right? And you know that in any country, any region, the moment you don't have much growth, eventually you have trouble with your people. Right? They will vote you out, or you may even, unfortunately, to some extent, have social unrest, depending on how bad is the unemployment problem in your country. That's why the Europeans have cut interest rate very, very aggressively from about 4% down to about 2%. I think they will cut a little bit more, but it may bottom at about 1.5. It's at 2 now. So there's not much space. But you look at loans growth, it's hoping to pick up. And the more important thing is the fact that Europe finally realized that they need to do a lot of things by themselves. They cannot depend on US anymore. If previously they have this perception that US is a friend, I think the perception have totally cleared that definitely not a friend. Not to anyone. All right? Next will be Japan. Very interesting. Last 2 years, the Japanese market performed very well through corporate reform, through people not putting money in China but put money in Japan. I think one of the more important part is the chart on the right. Is salary in Japan for the last 30 years. Salary in Japan has been negative growth for the last 20 years, or even 30 years. It's only the last couple of years, post-COVID, there's actually salary growth in Japan. It's a rather good improvement that have led to, finally, they have inflation. Finally, they can have zero interest rates. They can abandon yield curve control. And you also must remember that Japan has a very large stock market. They do have a lot of good quality companies, especially after the latest corporate reforms. And people is willing to put money in Japan. So the question, remember just now, initially when I say if people want to put less money in US dollar, so if you think the developed countries, how much will they put in Europe and in Japan? And in Asia, how much they want to, and how much would they also put in Japan? So there's this two-layer effect that you think of. All right. Let's talk a little bit about China. Last 2 years, everything looked very bad in China, partly because property prices crashed. Property companies went bust. But after September last year, when the government, Chinese government and central bank actually worked together to say they want to support the economy, and the Chinese government say we will support and make sure that there's no more corporate failures for property companies, sales of second-hand market, second-hand property recovered, but only in the largest cities. One, of course, property prices dropped 40–50%. Some people may think that it's cheap enough. Secondly, the effect is that if you are in a large city, all those people from third-tier, fourth-tier cities will always naturally move to the larger city to look for jobs, look for an education. All right? So people with resources in China are already putting money to work, especially only in first-tier cities where the demand is there. But the reality is third, fourth-tier property market is still very, very, very bad. What you have now in China is a very fragile, I would not call it stability, but a fragile limbo. Things just go flat. All right? Because the big cap, your first-tier city is a big percentage of the total property market. Right? It's still fragile. You can look at this. This is new launches sales. It has improved, but after Liberation Day, new launches sales drop again. People's confidence again draw back. All right? So this is where China still face a lot of problem, especially in the property sector. But because the government says I'm going to support the property sector, it has reached some form of a stability. You can call it stability if you want. All right? But let's talk a little bit quickly. I think what is important going forward is the fact that after the last 20 over years, US have a lot of manufacturing left Europe, left US, even left Asia. We have really come to a situation whereby Asia now control or produces huge amount of a lot of technological products for the whole world, led by China. So this will also have an impact on you to ask yourself, because they are all so centered here, is it so easy through the tariff I can move back to US? And also you must think of the fact that you want to find an alternative supplier, not in Asia. How long will that process make? Those of you who work for multinationals or all that, you know that you want to look for a new supplier, it takes you at least a year or two, because you need to go and audit everything from the production capacity to how they treat their own labor. Everything has to go through a due diligence. All right? So this is not so easy as the tariff war. So things, I would say, still in the flux on that. All right? Now, this is something which I think will also have an impact on how effective the tariff can be. What does the number represent? The number represents the products produced by this country, how complex it is. The more complex the product, the more difficult it is to find a substitute. US say, I don't want to buy your things anymore, but sorry, only China produce it. You don't want it, sorry, you don't run your everything. So as you can see, you can put your tariff there, but you still need the product from that country. But the moment you need that product, the product comes into your country, sorry, the Americans bear the tariff, not that country. Because you need me more than I need you, by virtue of my products. All right? So you look at, see, for example, China, very, very low from the start, 0.5. Now it's back to almost, not within the top 10 yet, but they are improving quite well. But what you'll notice in 2023, latest data, European countries actually dominate the top 10, together with a couple of Asian countries. So that also means that Trump may not like Europe, tax Europe, but sorry, you still need the product from Europe. And once you need the product from Europe, the guy will tell you, sorry, you pay the tariff, not I pay the tariff. He will tell the buyer, say, we don't split the cost, you bear everything. All right? The other one is this also. Just now was said, this is what the Americans buy from China. Effectively, 75% of the products that come from China that reach US shores is so competitive that you cannot find a cheaper substitute or more efficient substitute. Effectively, only about 25% of the imports from China can be easily substituted by pricing. All right? And of course, China controls the rare earth trade, which is totally important, because they love to have a war, right? Unfortunately. You need that for the missiles to be shot and all the technical stuff. This is why sometimes both sides are also willing to negotiate. Now, just now we talked about, a lot of factories, a lot of multinationals may have to move part of the capacity out of China, like what Apple have done, right? 40% went to India. The question is this: before Apple shift out, the factory in China may have 2,000 workers. But the moment 40% shift out, Apple only needs 750 workers. And Apple will not be the only foreign multinationals that need to shift out. At the same time, Chinese companies also that do business with US and Europe will also need to find a similar situation. They also need to shift out. So there will be a period of 3 to 6 years. The manufacturing sector will continue to sack people. Sorry, VSS. That means people in the 30s, 40s, 50s, next 3 to 6 years, every year there will be job loss. And please do not forget that China produces 8 million young people every year to look for a job. So in such an environment, you'll have loss of confidence, loss of income, and potentially the probability of social unrest become higher. That's the reality. You have to accept it. There are millions and millions of people are losing their job over the next few years. Okay? So for tell the truth, the tariff to China is now just like a fly flying in around the ear. Stabilizing the domestic environment is far more important than all of this they are facing now. When you have millions of people without a job, and the country is so large, and the population is so large, you need to have huge focus, huge resources to focus on your people. You have no choice. All right? Your stability is very important. Okay? Now, just to show to you how much the Chinese people are saving. This is how much the Chinese people save every year last time. 5 trillion renminbi. COVID lockdown, cannot spend money, double up. Then you're surprised. After they reopen, they save even more money. Malaysia has the same trend. But after we reopen, we go for cuti Malaysia, we go back to normal. Property market crashed during the COVID period, right? They stopped buying properties. See what happened when they stop buying properties, how much savings they have? China now is the only country in the world whereby savings is 115% of GDP. Normally, anywhere around the world, US is maybe about, everything in is 14% of GDP. Malaysia is about 30, 33. China before this is about 40% of GDP. It's now 115% of GDP. What it means, I don't buy anything. So when you don't buy anything, your trade surplus sure besar punya. Well, in US, I have no savings, I buy everything. So you have trade deficit lah. Simple, you think of it. At this point, the differential, like yin and yang, very, very clear. Here doesn't spend at all. Huge trade deficit, huge amount of saving in the system. There, credit card roll over, right? But this creates a problem. There's so much money in the system, the bank cannot lend out. And the bank take the money already, 1% savings rate. You don't lend out, you don't make money. All right? Now this is interesting. How the people shift their money in such an environment. The black line is Chinese government 10-year bond yield, which means there's a bull run in the government bond yield. The yield dropped from 4% rally all the way to 1.6. That means the last few years, 10-year bond yield, 10-year government bond have a major bull run. Orange line is normal corporate credit. It spiked up. Property market crash, remember? So there's a period, yes, normalized. All the huge amount of savings, if I'm the bank, I'll buy a government bond, 3% yield, I pay 1%, I net, I still have 2%. And since it's a government bond, I don't need to make any provision, risk-free. But my margin dropped like crazy lah. Because you don't have anything. But what you have is a unique situation. There's so much money in the bond market, and you cannot make money anymore because the yield cannot drop anymore. You need to go somewhere else to look for money. And usually you go to the stock market. They have yet to go to the stock market in the big time. So the question now is, how will that environment emerge in China whereby people say, oh, I can go to the stock market now. Whether A share or H share, never mind. But I can exit the bond market and go to the health market. You need confidence. You need to have proper prospects before people go into bond equity market, right? Because it's higher risk, right? Then this is also a very important development in China. And where got cow, got elephant, got what? Monkey, and then got fish. When China emerged in the global stage in the late 90s, they're the cheapest producer in the world. Everybody, they also compete, they kill the competitor. So that time, the Ang Mo will call them, bull in a China shop, everything they smash. They trample everybody to death. A few years later, second largest economy in the world. So become Taiko already, right? So change the tone. 800-pound gorilla in the room. Sit there, right? Unmovable. Somewhere beginning of this year, a fish, it's not even a fish, it's a whale. It swam out of China. This represents the change in Chinese economy from a low-cost, low-end, cheapest producer you can ever get, second largest economy, still second largest economy, And now with the capability to write AI software that is as good, almost as good as the best in the Western world. All right? And this actually, I would call to some extent, make the Magnificent Seven or the Americans very unhappy. Because previously, because they control the chips through NVIDIA, right? And the Magnificent Seven just huddle together. The AI technology software only among the 7 of them. Everybody else in the world is blocked out. Right? You know, makan sendiri. But with this, I can produce a software 30-40% cheaper, free source. Please participate. Please use it any way you want. Rewrite the source code any way you want and call it your own. Please. What it means is actually it opens up, fertilize the technology sector, especially for artificial intelligence. You know, very important for new technology, new products to be developed, new participants, different type of demand is very, very important to accelerate growth. So you have to thank the Chinese boys for accelerating the growth of AI. Very, very important. All right? So after this, there are a number of new ones came out, right? T1, Magnus, QN. Latest is something called ZHU, BU, something like that. Also a very powerful one. All right? But then, you must remember, an economy cannot only survive on hardware. Those are a little bit new things. The other things that is now happening in China, you can see all of this. Remember the dancing robots, the dogs, magnificent hair, the artificial hands, and the more important part on the right is suddenly China's biotechnology industry is coming up with a lot of very, very advanced products. Very, very important. Why I say that? Your drugs can prolong life and save life. Your technology may not be able to do that. If your life is not prolonged, you may not be able to invent the technology. All right? And you look at it, this is very important, especially you see the headline from Financial Times. Financial Times is a newspaper that doesn't need to have flashy headline to catch your eyeball. They are very, very practical one, right? The other three, they need flashy one because they need to catch eyeball one. So what is happening is the development in China is in such that the China growth engine, I would say, is a little bit old. The 4 pistons that it have also a little bit worn out. It needs to be renewed. So you now have a 5th piston. The 5th piston may provide continuous growth, but China will not go back to 8 to 9%, right? Maybe it can extend the 5% growth target a little bit longer, maybe until 2030 or beyond. All right? That's important. But what is important is it gives you a new direction of the Chinese economy, migrating from the bull, then the gorilla, the fish, then you talk about drugs. It's very important, all right? I'm sure those of you who have fish at home, you rear your own fish, right? You need to put medicine in for the fish too, right? Very important, all right? Then there's the hardware, right? The Mak Saleh have put in huge amount of money for capex, for cloud. China baru start. And now they finally have the capability to say, my software is as good as the boys. NVIDIA can sell the chips to China. Jensen Huang very happy, can do more business. You ask yourself, if they catch up with the Mak Saleh in terms of spending, how much loans growth, how much job, how will it change the Chinese economy? I don't know. But here I must stress, the problem that Chinese have with property, the problem they have with unemployment will continue. What you have here is very, very painful, but you have something to soothe the pain a little bit. All right? That is very important. It can change, and what it also means that the risks that you attach to China, you can say, I may not think China is that risky. If that is the case, That's why the Hang Seng Index now is at 23,000 rather than 16,000 18 months ago. Because you think the level of risk, the level of valuation at this point, looking at better clarity, I'm willing to pay a little bit more. So that's very, very different compared to only 18 months ago. The turnaround is very important. This will also put China, I won't say make China an absolute darling of the investment world again, but suddenly, 2 years ago, a lot of people asked me, I want to invest in Asia but without China. Then beginning of this year, somewhere after Liberation Day, my Maksali friend tell me, I want to invest in the world without US. So you have it here now, all right? So quick one, beneficiary of all these trade wars definitely will still be ASEAN. Everybody will still migrate here to us. Quick one about Malaysia. The last one I think is the most important. Finally, we admit that we cannot research our own technology, we buy. All right, we have our own, all these things. And why is that important? Data centers will continue to be putting up in Malaysia, definitely. We will overtake Singapore eventually to be larger than Singapore. Whether we catch up with China or not, we don't know. But China's capacity is for Chinese company only. The rest is for the rest of the world. All right? US is the largest. US is something like 4,000 megawatt. Outsize everybody. All right? But it will put Malaysia definitely on the map. All right? And also very importantly, remember just as I showed you, Asia, including Malaysia, is a major player in assembly, testing, and packaging. You don't see Malaysia's name here. But Malaysia is under others at 20% in 2022. We are 7% of 20. We are 30% of others. We are a big boy. We are as big as Europe. All right? Fast forward a few more years, we are 9% of 23%. That means we also continue to be a big boy. So this development, together with this development, will tell you why this is important. Now, I'm not saying Malaysia is in the best condition, because the last 10 years, the previous government regime hardly have done anything. They only have an annual budget to tell you how much money they spend. Really, nothing was done. The country was neglected for almost 10 years, I would say it that way. All right? So this is something we are trying to make some move forward. And I think this is where you think of how you want to go forward on this as well. So in conclusion, unfortunately, volatility will continue to be high. Because before the CPU can be processed, the mouth opened already. And he'll tell you, I will do something. And then after that, he eat taco and come back. So you reverse, all right? What it means is that because of the tariff, there will be that underlying shadow of potential inflation creeping into the system. So people will continue to be cautious, which also means you cannot cut interest rate a lot, especially in US. But the rest of us in Asia, we have no choice. We got throw left, right, and center. You have to buy insurance. We cut interest rates. No choice. And in such an environment, this time round, actually, I am very happy for us, for investors. I remember 2-3 years ago when the Chinese market crashed, Chinese property crash, every single investor I met faced sheer black one. And I go to the bank there, I talk to all the relationship managers, today got scolded again. Not only they come to the branch to scold me, through the WhatsApp they also scold me. I'm sure you all have gone through that, right? This time around, this year, actually what he has done have far greater negative implication on the world, but none of you are in that mode. I think it's a good thing. You have learned to diversify, learn to appreciate how risks happen, and at this stage, you can still ask me, a lot of people ask me, what can I buy? Here, I would say that you need to focus on products that have good quality products, preferably that can give you a good income, if possible, on a monthly basis, maybe minimum quarterly, then you want some growth. Right? If you have no growth, you must just put all in FD. After 3 years, your value also of your money put there will also grow. Right? Okay, this is the final part. We are neutral on developed markets. We still like Asia. We think China is definitely something that you need to look at. But please don't be like last time. I know last time before the China market crash, for every dollar you go to the bank, 60 cents go to China one. Please don't do that anymore. China have changed. The risk premium have changed. I think now for every dollar you put 15 cents in China is okay. And you think it drop, you go up to 25 cents or even 30 cents. Can. Go up, sell, go back to 15 cents. Wait. All right? So this is something to look at. We still like ASEAN. ASEAN, unfortunately, last few months, people just sell ASEAN. You know why? After he started to put tariff on everybody, right? Then everybody said, wow, all ASEAN countries got almost trade surplus with China, US one. Sure, kena kau. Everybody just sell ASEAN. Whew. So kena lah, everyone, including Singapore. Singapore dropped the less lah, but still kena. But Singapore actually have trade deficit, not trade surplus. All right? Malaysian bonds, actually you'll be surprised. Malaysian bonds is one of the best performing bond market in the world. Top, you compare all the bond market in the world, Malaysia is the top 5 bond market. Why? Because US dollar is weak, US dollar is volatile. People don't want to be in US dollar, they go for local currency bonds. You'll be surprised, Singapore bond market also went up on a yearly basis 16%. Who talk about Singapore bond market one? One, they don't have, government doesn't have budget deficit. So the government bond market, them very, very small. The corporate credit side also very small, but still go up 16%. All right, there's a diversity, look at that, all right? Global bonds, because it's generally USD denominated, we are neutral lah. All right, here I think I spoke too long. My good friend here signaled to me already. Thank you for your time, everyone, thank you.